Welcome to Drill Down Earnings. We have quarterly results up from Comfort Systems. Maybe this is not one of the technology companies you think that we cover here at Epistrophy Capital Research, but it is. I'm Cory Johnson, Chief Market Strategist, and I'm totally biased. I have owned this stock for 10 years. I don't give investment advice because usually they don't turn out like this. But this has been an amazing return on this company, and what they're doing in the world of technology you wouldn't have expected to find. With this company does HVAC and electrical. Yeah, they put the ducts into buildings and electrical components. They acquire a lot of firms that do this work. They've been doing so for the 20 years I've been covering this stock. But it is just amazing to see what they're doing, and Q3 earnings really showing this. This was better than Wall Street's expectations. They gave $2.45 billion in revenues and $8.25 in earnings. The street was looking for $6.29. This is well above my estimates as well. One of the ways they've grown this business so fantastically is by doing acquisitions. So they bought an electrical company in Grand Rapids, Michigan, as well as another one in Boca Raton, Florida, that are going to give them another $200 million in annual revenues, they predict, and about call it $17, $18 million in incremental EBITDA. But when you look at the actual numbers of what this business put up, the technology is driving growth. Their technology unit, which we're going to talk about here, is driving the growth at Comfort Systems, such that the overall business was up 35% in terms of revenues in just a year's time. Again, hitting record numbers, $2.45 billion in revenues, profits of $292 million. One of the metrics they give out is one of the things you expect from like a Starbucks or the Gap or something. They talk about same store growth, because they're constantly doing acquisitions. I think this business is as good as any ever. Maybe Cisco's the only one I can think of that's done consistent acquisitions and folded them in successfully to maintain company culture and grow the business really, really fast. They've been doing it, like I said, for decades. Operating profit margins getting better and better, 15% operating profit margins now. Fantastic margins from this company, even as the business grows, expanding those margins, in particular in their electrical segment, where they're doing 26.2% gross margins, or mechanical segment, the other segment, they think of HVAC, right? And liquid cooling and all the stuff that go into data centers, 24%. Did I say data centers? Yeah, I said data centers, because what used to be a very small business, now technology, they call it, is 46% of revenues. They do a lot of things. Technology, as I mentioned, data centers, manufacturing, education, healthcare, office buildings, retail, government, multifamily housing and residential stuff, and other stuff. But that's kind of the magic of this business. Now, technology, and particularly their modular construction. We talked earlier this week about a company, Vertiv, that does modular construction for data centers. These guys are also focused on that, and that is really driving this revenue growth here. Their data center business in particular, their technology business, up 82% on a year-over-year business when it was at record levels a year ago. Their manufacturing business up 20%. And that is the beauty of this model, that education, 7% of revenue, not nothing for these guys, is actually in a nosedive, down 12% on a year-over-year basis, has been declining now. Last quarter, with the growth rate had shrunk a lot. The previous quarter, the growth rate had shrunk a lot. But who cares? Because healthcare is taking off, up 38% on a year-over-year business. So when one business pulls back, another seems to be accelerating, but technology breaking away. They have captured the data center business for their model, and as a result, you see this fantastic growth in a couple of their units. Right now, it's office buildings and manufacturing, but technology, and healthcare, as I mentioned earlier, but technology, my goodness, just doing so very well. So how did the stock react? Well, in a way that brings smiles to the faces of the Johnson family. Yeah, I've got 4 kids in college, so you should subscribe to this channel because we need your help. But this one certainly helped a lot here today. Stock was up 18% on the numbers reported before the market opened. And for the year, Comfort Systems USA up 131%. I mentioned that strategic acquisitions are helping with the acquisition of Zelstra. Good Dutch name there. They like that in Western Michigan, as well as Meisner Electric in Boca Raton. But the backlog here, not just the companies are acquiring that have business, but they are growing their backlog. This might be the number that helped the most. Their backlog's now at $9.38 billion. As fast as they can build these projects and finish these projects and recognize these revenues, they're booking even more deals. So now the backlog is at 1.13 times the revenues, which for a trailing 12-month revenues, which is just the best this company has done, as you can see, going all the way back to the post-COVID period there of 2022. And as technology has grown, this whole business has grown. And the key gating factor for these guys is how quickly they can seed at these projects, and which is the modular construction is helping a lot. And how fast can they train and hire capable staff? How do you do that? Here's CEO Brian Lane.
First and foremost, this is a good place to work, right? We treat people fair and with respect. We pay them well, and there's a good benefit package. So we're constantly recruiting, but as you can tell by our numbers, we're up over 21,000, access to another probably 35, 4,000 contract laborers that we have. So all in all, we're constantly recruiting, but we do get people to come here and work. We also have a lot of work, which makes us a good place to work as well. So how much can we grow? We continue to train. We're improving productivity constantly. We're trying to pick the right jobs that we're good at, planning them using BIM, prefab and modular help us. But the enhancement that we are achieving with the skilled workforce is, the best I've ever seen in my career today.
And yeah, despite that Boston accent, the company's based in Houston. He can talk however he wants to, as long as he grows the business in this way. But what's it all mean? What's your big drill down earnings takeaway? And what's the bite, the one number that tells us a whole lot? Well, Comfort Systems USA, Q3 earnings, your essential summary tells you that revenues are growing fantastically for this business, up 35% on a year-over-year basis. And I don't usually talk about stock gains, but because I own this stock, I want to focus on that, not that thing. But I want you to know my bias and my joy with this. This stock in 5 years is up 1,210%. NVIDIA, 1,252%. So NVIDIA-like gains for a company that does HVAC and electrical, yeah, that's happening with Comfort Systems. And the bite, maybe the thing that tells you why this is moving, the drill down earnings bite, the stock is moving so well, because they reported a $9,376,838,000 backlog. Fantastic, the biggest backlog ever for this company, 1.13 times their revenues, that are growing so fast because they've captured the data center business and the need for experts in cooling, experts in electrical. These are the right guys at the right time. And like I said, I'm biased on this. This is not investment advice, but this one has worked out really well for us and for Comfort Systems, and it's a fascinating business to watch. All right, thanks for checking out Drill Down Earnings. If you like this, subscribe, follow us. Follow us on TikTok or Instagram or YouTube at Drill Down Pod. Follow me on X at Cory TV. Catch all the latest from Epistrophy Capital Research.